Okay team, the crypto market finally woke up and today we'll break down what really happened, but also why it might be a bit too early to celebrate. We'll talk about Cardano and Solana as well, so stay with us until the very end of the video. Dropping a like, leaving a comment and subscribing with the bell turned on are completely free ways to help us beat the YouTube algorithm and keep growing. Thanks in advance. The crypto sector finally showed signs of life, with Bitcoin climbing to $65,000, Ethereum touching almost 1,900, XRP pushing past $1.10, and Zcash and Hyperliquid pumping 7-8% in the last 24 hours. The total crypto market cap jumped to $2.3 trillion, and the main driver of this green wave is the United States. Inflation in the world's largest economy cooled off in a way very few people expected. The rate dropped to 3.5%, marking the strongest cooling signal in months. That shift immediately changed investor sentiment. The biggest contribution came from the energy sector. Fuel prices fell noticeably and electricity prices also declined. When energy becomes cheaper, the entire economy gets a boost. Transportation costs drop, deliveries become cheaper, and production operates under less pressure. Even services, which usually keep inflation elevated, moved more calmly this time. This is an important signal for the Federal Reserve and puts it in a much more comfortable position. Until recently, there were concerns that another rate hike might be necessary, but after this report, those expectations evaporated. There is simply no logic in tightening further. Markets now expect rates to remain where they are, and if the trend continues, rate cuts could even be considered later. Nothing is guaranteed, but it's enough to bring back optimism. And as we've said many times, lower inflation means less pressure on interest rates, which is a direct positive for risk assets. When rates stop raising, investors become braver and more liquidity flows into the market. The good inflation news brought some calm, but almost immediately another development appeared that could shift the mood. The US government moved around $288 million worth of seized crypto assets to Coinbase Prime, and transfers like this are almost always part of the preparation for a sale. This isn't just a technical move. Institutions follow strict procedures when dealing with large amounts of crypto. Government wallets aren't used for direct selling, so assets are first sent to a platform capable of handling big volumes under controlled conditions. This type of movement is a clear signal that unloading might be coming. It's not an isolated case either. It's a pattern repeated many times over the years. In July 2024, the US government made a nearly identical transfer. The market reacted instantly because traders know what usually follows. Just hours after the move, Bitcoin dropped below 60K, even though the actual sale hadn't started yet. When a major government player appears to be preparing to sell, investors act preemptively. Some panic sell, others reduce exposure, and many simply step aside, thereby shrinking liquidity and creating conditions for sharper downward moves. Now we wait to see how the market will react to the latest transfer, whether a real sale will follow, and whether prices of major cryptocurrencies will head down again. While part of the market is worried about potential government selling, something interesting is happening inside the Cardano network that shows how differently various investor groups think. Data reveals that whales have been steadily accumulating tokens, not a slight increase, but a clearly defined trend. Addresses holding between 100,000 and 1 million ADA have added more than 40 million coins in just a few weeks. That's a substantial amount, suggesting big players see value in accumulating exactly when the price is sitting at extremely low levels. What makes this even more notable is that retail activity has dropped. Small transaction volumes have declining, which suggests everyday investors aren't ready to take on risk in the current environment. Meanwhile, whales seem to be positioning for a longer-term horizon, likely expecting that current prices represent an attractive accumulation zone. These periods of divergence between groups often precede stronger moves later on, because when large wallets start building positions, they usually have a clear strategy and the patience to follow it. This doesn't guarantee a sudden reversal in price, but it shows that something more meaningful is happening beneath the surface than simple price fluctuations. Cardano is in a moment where short-term retail pressure may continue, but if whales maintain their pace, the balance of power could shift. The market often reacts with a delay to structural changes like this, so it's worth watching closely. We wrap up today's video with Solana, which according to analyst Ali Martinez might be on the verge of a strong short-term rally. The reason is that the super trend indicator has flashed a buy signal for the first time since October. Martinez believes that if buyers stay active, Solana, which is currently around $77, could climb to $96 and even $121. Another positive sign for Solana comes from Morgan Stanley. The Wall Street giant has filed documents with the SEC to launch its own spot Solana ETF. This would open access to the asset for millions of conservative investors who typically avoid crypto, but if Morgan Stanley provides a regulated way to invest in, so many might jump into the ecosystem. If the product is approved, the bank will join other major financial institutions, including Bitwise, Fidelity, Franklin Templeton, Canary Capital, Vanek, and Invesco, all of which already offer spot Solana ETFs. That's all for today, friends. Have a great and successful day, and see you tomorrow.